More bad news for renters, because renters get stuck renting because they're spending so much of their money on rent. When demand outstrips supply like this, it's usually the power with the landlords.
So are buy-to-lets still worth buying? And what's the general consensus amongst the so-called experts and landlords? Friends, let's dive into this week's property update, which will be more focused on the buy-to-let sector, but with news about mortgages and their rates for those looking to buy their first home. They'll also be included too. Now, on a previous video I did a while ago, I shared some shocking statistics, at least from a landlord's perspective, where we realized that almost 250,000 of them would be loss-making due to the interest rates jumping back up. And I say back up because historically we are much closer to the norm or average rate than we was during the money printing era during the pandemic, that many amateurs and newbies in this space got used to. Now, since then, rates have somewhat started to stabilise, but we aren't quite there yet. And recent news has come out showing us that landlords in Great Britain are now selling up, and they've dramatised this by calling it the Great Buy-to-Let Sell-Off. And hearing or reading this would make you question if the buy-to-let bubble has indeed popped. Now, there's a common misconception amongst the public that landlords wait around all day to pounce on properties to get others to pay off their rent. But a recent report by Rightmove showed that the new seller asking prices were actually down by 1.7%, which is equivalent to £6,088 last month alone, and that landlords were actually buying the least amount of homes. Now, of course, the average sits at £362,143, which from my perspective is likely not to get you the best yield or return on your money, especially when you consider 25% deposits and all the fees that come along with it. But the data showed that this was the fewest homes bought by landlords since 2010. And if we just look at some statistics around the share of homes sold by landlords in Great Britain over the past few years, in 2022, 15.7% of landlords sold their homes, and in 2023 so far, 14% have sold them too. And interestingly, when it comes to investors buying up stock, in 2015, 15.7% of homes were bought up by those looking to get into the property investment sector. But this year, that number is down to 11.2%. Again, this is highly around the mortgage rates not looking as appealing, and of course the huge increase in house prices we have seen over the last few years. Now, if we look more specifically into countries, Scotland has actually seen the biggest sell-off this year. Landlords actually made up a record 12% of the sellers in Scotland in 2023, which is up from the 10% that we saw in 2022. Now, we know that there are tighter rules and regulations in Scotland in the form of rent caps, making it much more difficult for landlords when refinancing to make their numbers work or getting a positive yield as their costs increase. And I know this myself, as we have a property in Scotland and have queried potentially selling it too. But there are many positives to consider, which I want to run through in some more detail that may potentially surprise you, such as the rent prices and mortgage rates. If you look at the positives from a landlord's perspective, there is a lack of properties available to rent. Research from Hamptons, taken by Anisha Beveridge, stated that rents could increase by 25% by the end of 2026. Now, of course, this isn't 100% guaranteed, but when you are running the numbers on your properties, it's always important to factor in such possible increases in the rents that you can achieve, and then decide if it's worth riding out the storm for now for a few years. Or of course, you can always consider investing and putting your money elsewhere. And we know if you buy right, and by right I mean the right location where demand is high and you're happy with the tenant profile, the rental growth, well, it often softens the blow for landlords. And just on this topic, we have an article that I just want to share some thoughts from, and it comes from Savills Estate Agents and Knight Frank. Now, Savills have stated they believe the average UK house price will fall by 3% in 2024 after a 4% drop this year. And Tom Bill, who is head of UK residential research at Knight Frank, goes on to state, the story of a slowdown is a double-digit fall in transactions rather than a dramatic price correction, which has been kept in check by weak supply. He then goes on to add, higher rates, the prospect of a general election, overseas conflict, and the ambiguity over when the bank rate will peak are all sapping sentiment. We expect prices and sale volumes to bottom out next year as the economic backdrop stabilizes. So if that happens, make sure you're ready to pounce, friends. And with that said, let's segue now into actual rates. We are aware that lenders have been cutting rates following the Bank of England's decision to hold interest rates again at 5.25% and amid falling inflation, which now causes many people to ask the question, if mortgage rates have peaked, could we therefore see a likely drop next year? Now friends, I don't know the answer to this, and I've spoken to many brokers over the past few months who also share my sentiment. we're all kind of making guesses, but we do share the general consensus that they won't go down to the rates many perhaps are wishing for. But one thing I've recently seen is that 2 years are now priced below 5-year mortgages. I had to refinance one myself recently on a buy-to-let, and I'll share that with you in another video with some figures and calculations. Now, we know the base rate has remained at 5.25% and the average mortgages are around the 6% mark. But we also have details from the FCA that 1.4 million mortgages are set to end in 2024, which will force homeowners to pay more than £200 a month on their mortgages. So it's definitely going to be interesting to see what lenders do with their rate cuts. But here on the screen, taken from Money Week, is a few popular ones that you may find of interest, along with their figures as of recording the video this weekend. Now please feel free to screenshot or pause the video if these are of interest to you, but just last month we wasn't seeing 2-year fixes less than 5%, so times are definitely changing. And the average rates to date are 6.19% and 5.78% respectively. And even more interesting, and something that actually goes against what I believe is a statement from Ashley Thomas, director of London-based mortgage broker Magni Finance, who stated, "I expect mortgage rates to reduce further in the coming days and wouldn't be surprised to see a number of lenders offering options sub 4% before the new year." Something I'll be completely honest with you guys, I didn't see coming, at least not this soon. And to add further to this, a somewhat supporting comment was from Kirsty Wells, who works at Blueprint Mortgages and Protection. She stated that following this extremely positive inflation data, there's a chance we could see sub 4% mortgages by as early as 2024, and the Bank of England could reduce the base rate by the end of the second quarter of next year. So friends, do with that information as you wish. But anyways, let's quickly look at variable mortgages too, as some of you may be on those and may be weighing up your options. 2.2 million homeowners are on variable mortgages, which is tied to the Bank of England base rate. Now the average standard variable rate is currently 8.19%, which has gone up 0.01% since October. And those who are obviously on variable mortgages who have been waiting for a good time to fix, in my personal opinion, not financial advice, I would definitely look at least considering doing this sooner rather than later. And this sentiment is actually shared by somebody else, Sarah Coles, who is head of personal finance at Hargreaves Lansdown. And she goes on to state, "You will need to be comfortable with watching fixed rates potentially fall further into next year, but you will also have the certainty of a fix at a lower rate than we've seen for months. So if you are on a variable, please do have a conversation with your mortgage broker just to see what's out there and what could potentially be of benefit to yourselves." Now if we dive into buy-to-lets more specifically, they are obviously more expensive in terms of the rates that you're getting. A few months ago we were around the 7% mark, with Moneyfacts stating that the average 2-year was 6.97% and the average 5-year was 6.16%, but these have dipped somewhat to 6.16% for 2 years and 6.1% for 5 years as of recording this video. Now of course this isn't brilliant news for landlords, which is probably why you're seeing many of them sell their properties. However, we also know that the number of homes in the UK available to rent is at a 14-year low, which kind of explains the crazy queues and the hundreds of applications you're getting just to get a house that you want to rent. And as a renter myself, I definitely sympathize with those who either struggle to keep up with the increase in rents or just trying to find a property that you want to move into. But at the same time, friends, I do think we need some sympathy for landlords too, because they do have to maintain mortgage payments, property upkeep, and so much too. But it does make you ponder what's actually going on. Given that we failed to build enough houses and we do have a supply issue here in Great Britain, could this just be all part of the plan? A way to get rid of smaller landlords and for larger organisations to come in and buy up all the stock? Well, I'm starting to think so, but maybe that's just my thoughts with my tinfoil hat on. Guys, let me know your thoughts about the buy-to-let sector and also where you see the housing market going in 2024. Thanks for watching.